An alarming 233 home developers in China filed for bankruptcy in 2023, a staggering revelation from the China Real Estate Association. The echo of this economic tremor was loudest in Zhejiang province, with 36 bankruptcy applications, making up just over 15% of the nation's total. Close on its heels were Hunan and Guangdong provinces. In a twisted sense of relief, the bankruptcy count for 2023 was the lowest since the dark year of 2020, when the COVID-19 pandemic first unleashed its wrath. Back then, 408 home developers had succumbed to bankruptcy, followed by 343 in 2021 and 308 in 2022. But as they say, the devil is in the details. The economic downturn has been particularly brutal on third and fourth tier cities. The home developers in these cities bore the brunt, suffering the most. Despite this decline, the economic downturn has hit home developers in third and fourth tier cities the hardest. Crike Securities Research Department highlights that home sales in China continued to dwindle in 2023 and challenges are set to persist in 2024. The reasons behind this sluggish housing market are multifaceted. Low consumer confidence is a key factor, with potential homebuyers hesitant to invest in a market that shows signs of instability. This hesitation is further fueled by an inventory overhang, where the supply of homes vastly outweighs demand, leading to a surplus of unsold homes. Another significant issue is the visible decrease in construction activity. This is largely due to falling apartment prices, which have caused the construction of apartment towers to falter. Developers, faced with the prospect of selling their properties at a loss, are understandably reluctant to invest in new projects. These challenges have had a clear impact on the landscape of China's cities. In the wake of these challenges, the construction sites around China appear less busy, and the construction of apartment towers has stumbled. The repercussions of these bankruptcies extend beyond the real estate sector, with China's banking sector grappling with debt repayment defaulters. The banking sector is on tenterhooks as loans extended to property developers are defaulting at an alarming rate. This financial quagmire is further exacerbated by the heavy pressure on local governments to keep property prices from falling. Existing home prices across 100 cities in China have tumbled by an average of 14% from their peak 2 years ago, according to the Baker Research Institute. Rents too haven't been spared, falling by 5%. In response to this economic maelstrom, the People's Bank of China has made a strategic move. It has granted banks the liberty to set aside smaller reserves, pushing them to extend more credit. This move is largely seen as a plan to accommodate a massive issuance of bonds by local and provincial governments to fund their infrastructure projects. As the ripples of these bankruptcies spread, China's banking sector is left grappling with the fallout, while local governments feel the pressure to maintain property prices.